All right, so special feature on the show today, we are going to discuss about the results of mutual fund stress test in the mid-cap and small-cap schemes and what does it mean for an investor who's putting its money in mid-cap and small-cap of these fund houses. I have with me Shweta Rajani, Head Mutual Fund, Anand Rathi Wealth. Shweta, good evening and welcome to the show. A very important day and we've been waiting for these stress test results and all the AMCs have gone through it and displayed their results, which are now made public on the AMFI website and also fund specific websites as well. And so I want to also understand the data in a nutshell from you, but then before that, let's get a quick and a crisp backgrounder. Why was this stress test a need of the hour?
Yes, good evening, Kavita. I think a very important topic because I'm sure all the investors and bits and pieces have been hearing about it, and trying to understand if there is any concern, any panic for the mid and small cap space. Now, why was it needed? If you see in the last 1 year, or if I just have to look at what large cap has delivered, large caps have delivered around 25% returns. You have small caps which have delivered like 50-52% return. So there's been a significant run up that we've seen in the small cap space as well as in the mid cap space. Mid cap performance has been very similar to large. And what happens is a lot of the times money chases performance. So given that we were seeing a good amount of returns being delivered by these two categories, even investors started investing in these funds. So if I talk about the last 12 months flow data in the mutual funds itself, I think small cap as a category would have received the second highest flows after the thematic or sector funds. So around 44,000 crores came in only in the small cap category of funds. So this obviously raised an alarm for the regulator because SEBI has always been focused towards protecting the investor interest. Also, just one more data point here as to why it was needed. If you look at the small cap or the mid cap universe, you'll see that there are a lot of companies which have in the last 9-10 months seen a 2x 3x jump in their returns, which means the valuations for a lot of these companies have also gone beyond 50 times 70 times. So these are few things that even the regulator was watching, and like I said, they wanted to protect the investor interest, which is where the need of the stress test. While what happens in the stress test is that these asset management companies from now on 15th of every month have to disclose a lot more information about their portfolios on the mid cap small cap schemes, some of it being how much time would it take to liquidate 25% 50% of your portfolio, what is the distribution in terms of market cap, in terms of the top investors, risk variables, valuation multiples. These are the disclosures, so more disclosure coming in, but the need being coming in from protecting your investor.
Right. So we'll also discuss about the result and also the kind of parameters and hypothesis that the fund houses were carrying out while conducting this stress test, Shweta. But then a lot of few factors which are very surprising also. Like for example, if you talk about a small cap fund and it's there all over. Talking about Nippon Small Cap, which is almost 46,000 crores AUM fund, and it's selling off its 50%. It's getting the liquidity done in 50% in almost 27 days and 25% in almost 13-14 days. Whereas if you talk about a SBI small cap, it's taking 65 or 60 days, to liquidate 50% of portfolio. So what is the reason behind this kind of a difference? Are we talking about a lot many illiquid stocks? Are we talking about the exposure which is difficult to liquidate for a fund manager? What goes in behind this kind of a data, and why this kind of a reason where a fund with a huge AUM is not able to dispose of it's not taking a lot of time to dispose of as compared to a fund which is not that huge in size and also in the number of stocks?
Yes, so 2-3 factors here that would impact this. One is that 46,000 crores. How is it distributed? So if you see the number of stocks that Nippon is holding, is upwards of 240 stocks, which in itself is huge compared to what SBI would be having at around 80, 90 stocks. So the portfolio is uh, well spread out across more number of stocks. That's one reason why they'll be able to liquidate it. Second is, if you see what and this becomes very important, is what's the average free float of the companies that you are investing into. Because if you have a higher free float, and you have that's coupled with a high trading volume, then you'll be able to liquidate your stock far earlier as compared to those stocks which have a low free float, which have lesser trading volumes. So that's also some of the difference. Thirdly, if you see that your entire small cap universe today, according to the SEBI definition, is everything below 250 first company is what is called as small cap. So in India, you have some 5,000 listed companies, and primarily what it means is 4,700 companies, all are called as small. Of course, from a fund manager perspective, his investable universe would be only the top 300, 400 companies in which he's participating. So how many companies is the fund manager holding which are in that higher market cap range will also determine how soon is he be able to liquidate. So I think these are primarily, I would say, three factors why you could see Nippon having a lesser number of days to liquidate 50% of his portfolio, and they've said 27 versus a 60 for SBI.
All right. Also, talking about the hypothesis that were taken under consideration, Shweta, could you also explain that and how are these situations close to reality? I mean, the markets run on a very different sentiment, and we are not sure about the volatility and the kind of turn the market takes. But then, what are the factors which were considered while taking these tests?
Yes, so if you see the stress test, one focus has been towards liquidity, and that's where number of days that it would take to liquidate. Second stress is that they're trying to address is also on the valuation, where you'll see that the funds have now started publishing what is the PE ratio of their scheme versus the benchmark, and what was the PE ratio for the benchmark for the scheme 1 year back. So what you're trying to see is your portfolio sitting on those stocks which are high in terms of froth? That's the second aspect. Third aspect in the stress test is also volatility as a factor. So how much risk is the portfolio bearing compared to the benchmark? And I think this is very important and a good move, because otherwise you would not have a fund publishing the beta to the benchmark and the standard deviation of the fund to the benchmark. A lot of these terms may be new to investors, but now that they've published it, and you actually see that barring one or two funds, their risks are actually anywhere between 15 to 20% lower than that of the benchmark risk, because the betas that they've published is in that range of zero point 0.8 to 0.85. The fourth variable is also in terms of the market cap split. So here again, SEBI had mentioned that if there is a need to rebalance your portfolio, then please do it. Are you too concentrated towards small cap? So that is also being shared now. So these are primarily 4, 5 factors: liquidity, market cap split, volatility, valuation, are 4, 5 parameters which the AMCs have to disclose in their stress test result.
But then what, Shweta, according to you, could be the key takeaways? Because see, looking at the stress test, I don't think so it will be fair for an investor to decide to exit a fund or maybe to enter a fund, because it is a stress test. In extreme conditions, how will your fund react and how will your fund, take steps to redeem the money is what is being tested. But for an investor, understanding point of view, definitely it's important to understand how the fund will take actions and move ahead to handle the crisis situation. But then what according to you could be a major takeaway in an investment decision process for an investor, Shweta?
You're absolutely right. This is a stress test saying that in extreme situation, how could the AMC sail through that? From an investor perspective, I think few things that are positive and the investor can take away is that one, these funds would see volatilities less than what you would see at the index level. So, if you're seeing 3-4% correction of the index doesn't mean that the entire thing is going to translate on your funds. There's a possibility that the funds will have a lesser downside to the market because all the funds, if you see, their standard deviations and betas are lower. Second, also, the perception tends to be that market is frothy, the valuations are high, but when you see the PE data that the funds are publishing, it again shows that it's not so much of a concern. So from an investor standpoint now, these two data points can also be used when you are evaluating a fund for your investment decision because a fund which is reasonably valued compared to peers, a fund which has a lower volatility can be your good choice. Apart from this, I think when you're taking your decision to invest, there are a few other factors that you should look at. You should look at is the fund seeing inflows or outflows, and that will tell you if there are any concerns on the fund. Like I said, if you're investing in the small cap funds, then look at how spread out the portfolio is. So how many stocks do they have? One thing that we look at is also what's the average free float of these funds, because like I said, higher the free float, the better it would be. So these are 4-5 factors from the stress test, 2 factors that you can look at, but you'll have to look at other variables as well when you're taking your investment decision.
Exactly, and what are those other variables? You get all that answer on the Money Show. But then it's time for a quick break, and post that we'll be answering viewer queries. Shweta, of course, is connected with us, and if in case you also want to send across your questions, you can do that on our WhatsApp number and our email ID. So see you after this break.